Question number 1. Which of the following is an assumption in a perfectly competitive financial market? A. No single trader or traders can have a significant impact on the market prices. This is absolutely correct statement. We should look no further. This is correct. Because market participants in a perfectly competitive market, they cannot influence the market price. Because perfect competition means there are large numbers of suppliers, there are large number of customers, and they are acting independently, and there is very little product differentiation. So basically, a single firm cannot dominate. Even a group of firms cannot. And in such market situation, there are no barriers to entry, no barriers to exit. So this is correct statement. Why not BCD? Let us discuss. Some traders can impact market prices more than others. Wrong. Market participants, they cannot influence prices in perfectly competitive market. This is wrong. Trading prices vary based upon supply only. This is again wrong. Trading prices are based on both supply and demand in perfectly competitive market. This is incorrect as well. Information about borrowing and lending activities is only available to those willing to pay market prices. Again, this is wrong, because pricing information is available to all market participants in a perfectly competitive market. So this is incorrect. After seeing several years of declining production and increased competition from foreign entities, the US government recently implemented tariffs to protect the manufacturing industry. This move would involve what? A. Prohibiting imported goods from a specific country. This is not tariff, this is called embargo. Complete bans, they are put in place to prohibit importing goods from specific countries like North Korea or Cuba. So this is not right. What about B? Prohibiting the unlicensed exporting of specific information. Well, this is again not correct, because this is the feature of export controls. Export controls prevent the unlicensed export of specific information to specific countries. So this is not right as well. What about C? Setting a maximum limit on the quantity of goods imported. This is called quotas. Quotas are maximum limits on the quantity that can be imported in a particular country. This is not right as well. Then it has to be D. Applying a tax on imported goods to protect domestic producers. Like we want to protect our agriculture business, agriculture sector, so we will impose taxes on agricultural imports. So tariff basically is a tax on imported goods. Of course, it will generate revenue for the government, and they will also protect domestic producers, domestic agri producers, by making the imported agri products more expensive and then of course less attractive. So that is D. D is the right option. Next question says, which of the following segments of the economy will be least affected by the business cycle? So what basically is a business cycle? Business cycle basically is the rise and fall of economic activity over the long run. So we want to see which of the following businesses would be least affected. Let us move on to these options one by one. First, the commercial construction industry. Well, the demand for commercial construction industry is typically high when there is economic boom, and it is low during a contractionary phase. So this is something that will move in line with the business cycle. We are looking for the one that has the least one. Then second, machinery and equipment industry. This is again incorrect, because during a downturn in economic activity, also called the recession or contraction, firms' investment in new plant and equipment normally is very less, is substantially lower. Thus, the machinery and equipment industry is more sensitive to business cycle. So this is also not correct. We are looking for the one that is least affected. What about C? Residential construction industry. It is also very sensitive to interest rates. It's sensitive to unemployment rates, consumer wealth, in other words, the business cycle. So all these will cause the changes in the residential construction industry. So this is also one of the businesses that will be affected by business cycle. What about the healthcare industries? You need health services. Health is an essential. Health services are essential. People need medical services, irrespective whether the economy is booming or is in slump. So this is the industry that is least likely to be affected by business cycle. Hence, this is our right option. Next question, which of the following most accurately describes the normal sequence of business cycle? Expansion, contraction, trough and peak. Let me show you how does a business cycle looks like. Here we have the peak. Economy slows down, then there's a trough, there's an expansion. Expansion leads to peak, the boom, then it slides into contractionary phase, then there's a trough called slump, and then the recovery phase. So this is what we should be looking for. Let us see what do we have in option A. Option A says expansion, contraction, no. After expansion we have, look at this, we have a peak, expansion, peak, contraction, and then we have a trough. So expansion, peak, contraction, trough, that is a perfect combination, and this is our right option. Next, which of the following definitions best describes the business cycle? Option 1. Activities where the decline in the economy's real gross domestic product persists for at least half a year. This is wrong. It is 2 consecutive quarters. 2 consecutive quarters, not half a year. This is incorrect. Incorrect. What about B? Activity marked by a relatively high level of GDP, full employment and inflation. Again, this is incorrect. This is an expansionary phase, which is a component of business cycle, but it does not represent the business cycle itself. It's one of the phases of business cycle. What about C? Activity that alternates period of growth and decline in an economy's GDP. This is true. This is what you call business cycle, because rise and fall of economic activity over the long term is what you call the business cycle or economic cycle. As economy expands, it will reach a peak, then there's a contractionary phase, then there will be trough. So this is true. Why not D? Activity where GDP declines, inflation moderates, and unemployment increases. This is one of the phases. This is the contractionary phase in the business cycle, and this itself does not represent the complete business cycle, hence it is incorrect. Next, a period during which GDP is rising and unemployment is falling is called recession. No, this is not correct, because during recession GDP does not rise, but we are looking for GDP is rising. This is incorrect. What about peak? Again, peak is the highest point of business cycle, the economic activity. Basically, it's the point where the GDP is at the highest level and the unemployment level is at the lowest level. So this is not what we are seeing. In fact, unemployment is falling. So then it has to be C, because during expansion GDP is rising, correct, and unemployment is falling. So that is the right option. C is the right option. Why not D? Because the trough represents the lowest level of economic activity, and basically it's the point where the GDP is at its lowest and unemployment is at the highest. Economic fluctuations, also called the business cycles, are best described as long-run increase in a nation's standard of living. This is not right. This is basically economic growth, not the economic fluctuations. What about B? Changes in the profit of a given firm from one year to the next period. Well, business cycle refers to overall economic activity, not for a particular business or a firm. Wrong. What about C? Fluctuations of equal duration and equal severity in the level of economic activity over time. Again, this is wrong. Business cycles are not predictable. They are of not same length. They are not of equal duration, and they are not of equal severity. This is wrong. Also, fluctuations in the level of economic activity relative to long-term growth trend. This is the perfect description of business cycle, or what you call the economic fluctuations. D is the right option. Gross domestic product includes which of the following measures? A. The size of a population that must share a given output within 1 year. Absolutely incorrect. Size of population is not a part of GDP calculation. B. The negative externalities of production process of a nation within 1 year. This is again incorrect. What are externalities? Externalities are influences that the consumers and producers have on one another.
They can be positive, they can be negative, like pollution, congestion, noise from production activity. So this is not true. C, the total monetary value of all final goods and services produced within a nation in 1 year. This is absolutely right. This is the perfect description of GDP, gross domestic product. It's the dollar value of all final, mind the word, final products and services produced within the economy in a stated period of time, and this is the correct option. What about D? The total monetary value of goods and services including barter transactions within a nation in 1 year. Wrong. GDP only includes monetary value, not barter value, hence we got the right answer. C is the correct option. Which of the following is not a key assumption of perfect competition? Customers are indifferent about which firm they buy from. This is true. This is a perfect assumption, a correct assumption. Then the level of firm's output is so small relative to the industry's total output. This is true because in perfect competition, a single firm is insignificant. It has very little output compared to the overall output of the total industry. So this is again the correct assumption. What about C? Each firm can price its products above the industry price. This is wrong. This is not the key assumption because there are so many firms. Firm cannot set their own prices. In fact, they have to take the price that is currently prevailing in the market. So in fact, firms are price takers. They cannot fix the price. So that's why this is the incorrect statement. What about D? There is freedom of entry and exit out of the industry. This is correct. Firms are free to enter, firms are free to exit. This is the right assumption. So this is not correct. Not the key assumption. C is the right option. The kinked demand curve is associated with, look no further, we know this for sure, it is associated with the analysis of oligopoly. I am sure all of you would know quantity on the x-axis, price on the y-axis. This is how the demand curve in an oligopoly would exist for a single firm. So look no further. The analysis of agricultural markets, that's the perfect competition. Analysis of monopolistic competition, pure competition, so we got the right answer, D. An industry that is oligopolistic would be best characterized by one firm selling a product with no close substitute. This is incorrect. This is monopoly. We're talking about the oligopolistic market. Significant barriers to entry, yes, that can be true. There are some features in oligopoly market, some conditions. A few firms in the market, that is the oligopoly. Significant barriers to entry, and this is right here. Then in oligopolistic market, there are differentiated products. Prices could be fixed, they could be semi-fixed, and there is a kinked demand curve we just discussed a little while ago. So this is the correct option. What about C? Horizontal or flat demand curve for the output of individual firms. This is not correct. Horizontal demand curves represent perfectly price elastic demand curves, and that's only possible in perfectly competitive markets, not in the oligopolistic market. In oligopolistic market, the demand curve for an individual seller is kinked. What about D? The absence of significant economies of scale. Wrong. This is the feature, the characteristic of perfect competition. This is not right. In oligopolistic market, there is presence of significant economies of scale, so this is wrong. In markets that are imperfectly competitive, such as monopoly and monopolistic competition, firms produce at an output level, whether it's monopoly or monopolistic competition or oligopoly, or whether it is perfectly competitive market. Profits are maximized where the marginal revenue is equal to marginal cost. Keep that in mind, and that would make D to be the correct option. Which of the following would indicate that the economy is an expansionary phase? A. Business increase capital investment. That makes perfect sense. In expansionary phase, GDP increases, firms' profits increase, the demand for the goods and services increase. So in order to take benefit of this opportunity, firms will invest in capital assets. Business would increase and expand their workforce. So this is the correct option. Why not B? The economy's resources are underused. This is incorrect, because during expansionary phases, resources utilization increases. Wrong. What about C? Potential national income will exceed the actual national income. Again, this is wrong. An economy that is in expansionary phase, it will have rising economic activity. The actual economic activity would be more than the potential growth trend. So this is again incorrect. What about D? Building up of inventories in excess of consumer demands. This is totally incorrect. This would happen when there is economic slump. During trough, during economic slump, the demand of goods and services declines and the inventories build up. So this is wrong. In fact, when there is expansionary phase, then inventories will run down. Inventories balance would fall. So that is incorrect as well. In order to sell at the rate of output in markets controlled by monopolists, price is set where? We just discussed a little while ago. Irrespective, whichever is the model of industry, the representative model of the industry, whether it is monopolistic competition, oligopoly, or perfect competition, profits are maximized where the marginal revenue is equal to marginal cost, which means B is the right option. Now, this is a good question. If the Federal Reserve wanted to implement an expansionary monetary policy, increase in money supply, which of the following actions would the Federal Reserve take? Raise reserve requirement. If it is done, it would lower the money supply. And raising of discount rate would also lower the money supply. This is incorrect. This is not the right option. What about B? Purchase additional US government securities. That would increase money supply. And lower the discount rate. That would also increase the money supply. I hope you would remember from our overview of this specific module. So this is correct, apparently. Out of the options given, let's see the options C and D as well. Raise the discount rate. Raising discount rate would lower the money supply. And sell the US government securities. Again, this will lower the money supply. What about D? Lower the discount rate. Yes, this would increase money supply. But raising the reserve requirement, it would lower. So it's partly true, but the best combination is option B. Okay, now this is a good one. Which of the following correctly lists the 3 ways to increase the money supply? Remember, we want to increase the money supply. Raise reserve requirement? No. You need to lower. Raise reserve requirement ratio? No. Lower the required reserve ratio? Correct. Increase the discount rate? No. Buy bonds in the open market? Yes. But this is partly correct. What about option D? Lower the reserve requirement, required reserve ratio. That will clearly increase the money supply. Decrease the discount rate. Yes. Buy bonds in the open market, thereby increasing the money supply. So this combination would be the one that will increase the money supply, and hence our right option. Okay. To decrease the money supply, the Fed might sell government securities on the open market. If it does, there will be more securities in the market and less cash. So this would reduce the money supply. This is the correct option. Let us see the other options and convince ourselves that we got it right. Buy government securities on the open market. This would increase money supply. Decrease the required reserve ratio. This would also increase the money supply. Lower the discount rate. It would also increase the money supply. We want to decrease the money supply, so that would be done through A. A is correct option. An oligopolist faces a kinked demand curve. This terminology indicates that when an oligopolist lowers its price, let me write this down. This is the kinked demand curve. We have quantity on the x-axis, price on the y-axis. Now look at this. When an oligopolist lowers its price, the other firms in the oligopoly will match the price reduction. But if the oligopolist raises its price, this part raises its price, the other firms will ignore the price changes. Resultantly, the demand curve of the oligopolist will become more elastic. So this is the correct option. Look no further. I hope you would know from the basic overview of this module We discussed King demand curve in detail. So look no further, A is the correct option. A country recently experienced a drop in consumer purchases and a rise in business inventories of durable goods. Wages grew slowly and unemployment increased. Business investment in plant and equipment dropped sharply and profits fell. Both interest rates and stock prices fell. Which of the following statements best represents the country's current economy? The economy is entering an economic stagflation. This is incorrect because stagflation would result from declining output and rising prices. We don't see that happening here. We are seeing lower prices, so this is not right. What about B? Economy is exiting an inflationary period. Well, there is no indication in the information given that the economy has exited an inflationary period, so we can't assume. We can't say that for sure. Economy is exiting a depression period. Again, there is no indication that the current state of economy shows a recovery from depression, so not sufficient information is available. What we can surely say is that the current economy is in an economic recession, because lowering demand for goods and services, increasing inventories, unemployment is increasing, investment in plant and equipment is dropping sharply, profits are falling. So this clearly is an indication of economic recession. Under monopoly, strategic plans focus on what? A. Profitability from production levels that maximize profit. Since monopolist is facing no competition at all, so he will produce at an output level where the profits are maximized. Of course, where the marginal revenue is equal to marginal cost. So this option looks to be correct. Let us see the other ones also. Maintaining the market share and being responsive to market conditions related to sales price. This is again wrong, because responses to market conditions, the market prices, that's the characteristics of perfect competition. Because in perfect competition, firms will have to adjust their prices according to the prevalent market prices, because in perfect competition, firms are price takers. So this statement would be true in case of perfectly competitive market. Maintaining the market share and being responsive to market conditions related to sales price, because you are a price taker. So this is clearly not related to monopoly. What about C? Maintaining the market share and planning for enhanced product differentiation. Product differentiation is a characteristic of monopolistic competition, hence the incorrect option. Maintaining the market share, ensuring product differentiation, and adapting to price changes or required changes in production volume. These characteristics tell us that it could be a monopolistic competition. But look at this, adapting to price changes or required changes in production volume depending upon what others are doing in your industry. So this is a characteristic of oligopolistic market. So not correct. This is for perfectly competitive. This is for monopolistic competition. This is for oligopoly. This is the only correct option for a monopoly. A government is most likely to reduce taxes on investments when the real exchange rate is expected to be unusually high. Well, this is an important point here to note. Exchange rates can be very volatile. They can be very unpredictable. So fiscal policy is not based upon the exchange rate volatility. This is totally a ridiculous option. Inflation is expected to be unusually low. When the inflation is lower than the expected expected number, then the cost of goods and services will be more affordable for the buyers, which means the government doesn't need to reduce the taxes in order to increase their disposable income. This is incorrect also. What about C? The gross domestic product is expected to be unusually high. If GDP is growing faster than expected, then there is no need for the government to reduce taxes to increase spending, to spur higher spending. So this is again incorrect. Capital spending is expected to be unusually low. Yes, when the capital spending is unusually low, government will reduce taxes so that it can motivate investors to make more money on capital spending. Reducing taxes means the businesses will have more money to invest, right? So this will have the investors will have more money available in their hands, and they will spend more on capital investment. So this is the right option. D is the correct option. The discount rate set by the Federal Reserve is the rate that the commercial banks charge for loans to other banks. This is not true. We know for sure because of our overview. We know Federal Reserve sets the discount rate, and this is the rate at which the Federal Reserve gives loans to the member banks. So that would make C to be the correct option. The rate that the central bank charges for loans to commercial banks. So C is the correct option. Next. Which of the following options describe the phases of business cycle in order of occurrence? Recession, recovery, trough and peak. Incorrect. After recession there is trough, right? Not recovery. And after trough we have recovery. So this is an incorrect combination. This is true. Peak, recession, trough, and after trough there is recovery. See? So that makes B to be the correct option. Under pure competition, strategic plan focus on profitability from production levels that maximize profits. That is true for all market structures, not just for perfect competition or pure competition. Maintaining the market share and being responsive to market conditions related to sales price. This is true. This is true for perfect competition because in perfect competition firms are price takers. So that's true. What about C? Maintaining the market share and planning for enhanced product differentiation. That would be true for monopolistic competition. What about D? Maintaining the market share, ensuring product differentiation, and adapting to price changes, keeping in mind what the competitors are doing and required changes in production volume. That is for oligopoly. Since we are looking for the perfect or pure competition, so that would make B to be our correct option. A market with many independent firms, low barriers to entry, and product differentiation is best described as monopolistic competition. A natural monopoly basically is a firm that is so large and big that it's only that firm that can be the efficient supplier. On the other hand, an oligopoly market would be where there are few independent firms. I won't call independent because they depend upon each other with respect to the market supply. So few firms mean an oligopoly. And in pure competition, there are many sellers, many buyers, and the sellers are selling homogeneous products, not differentiated products. So that makes B to be the correct option. Variations between business cycles most likely are attributable to which of the following factors? Business cycles, sometimes the trough could be longer, sometimes recessions. So what factors are attributed to these changes in business cycles, the variations in business cycles? First, the law of diminishing returns. The law of diminishing returns means that when the firm increases the scale of operations, sometimes it becomes less efficient. By increasing the size of the operations, we are expected to produce more, but increase in size results in less efficient production. This is called the law of diminishing returns. Comparative advantage, we have discussed. Comparative advantage results in specialization by market participants. The participants will do only what they are good at, and it does not describe the variation in business cycle. What about C? Yes, duration and intensity. Duration here means how long the peak or trough stay, and intensity mean the degree of peak and trough. So while recession, for example, is defined as 2 consecutive quarters of negative economic growth, a depression is more qualitatively assessed after consideration of both its severity, how deep it is, and how long does it last. So these are the 2 attributes that we related to the variation between business cycles. And what about opportunity cost? Opportunity cost represent implicit cost in a decision making. These are the benefits given up for a particular decision. So we got our answer. It is C. Under an oligopoly structure, strategic plans focus on profitability. It's applicable for all. Maintaining the market share and being responsive to market conditions related to sales price. That is the perfect competition. Maintaining the market share and planning for enhanced product differentiation. That is the monopolistic competition. And maintaining the market share, ensuring product differentiation, and adapting to changes in the price and or production volume. This is true for oligopolistic market. So that is the right option. D is the correct one. This is oligopoly structure. Entry into monopolistic competition is frequent as no obstacle exists. This is incorrect. There are obstacles. Monopolistic competition has few obstacles. A market with no obstacle is basically the pure competition or the perfect competition. B, difficult with significant obstacles. This is again incorrect. Significant obstacles are a characteristic of oligopoly, not monopolistic competition. Entry into monopolistic competition is rare as significant capital is required. This is again incorrect. Significant capital requirement represents a significant barrier to entry, and that is a characteristic of oligopoly. So entry into monopolistic competition is relatively easy with only few obstacles. So that's your answer. Monopolistic competition is characterized by a relatively large group of sellers who produce differentiated product. Absolutely right. Look no further, but we will. A relatively small group of sellers who produce differentiated product, that would be oligopoly. One or two companies producing similar products, that would, if there's a one firm, that's going to be monopoly. If there are two or more, that would be again an oligopoly. If one, then it's a monopoly. A relatively large group of sellers who produce homogeneous products, clearly this is a feature of or characteristic of perfect competition. At the peak of a business cycle, which of the following conditions is most true? Output or GDP tends to be below the potential level of output. This is again incorrect. GDP is likely to be above its potential level. B, there is likely to be an excess supply of labor and business inventories are likely to be high. Wrong. There is likely to be shortage of labor and business inventories are likely to be low. You're talking about the peak. So this is incorrect. The overall price level is likely to be falling. Wrong. The overall price level is likely to be rising during peak. So this is again incorrect. Then it has to be D. Capacity constraints and labor shortages are likely to put upward pressure on the overall price level. This is true. At peak, the output is at maximum, the labor shortages are observed, and there is an upward pressure for the price. So D is correct option. The trough of a business cycle is generally characterized by A, shortages of essential raw materials and rising costs. This is incorrect. This would be during peak. Increasing purchasing power and increasing capital investment. Again, increasing purchasing power and capital investment come with recovery when the economy is recovering. C, unused productive capacity and unwillingness to risk investment. That is correct. The trough of a business cycle basically is an economic downturn. No positive indicators for the future. It's characterized by unused productive capacity and an unwillingness by the investors to take risk and make new investments. So that is true. C is the right option. And let us see what do we have in option D. Declining purchasing power and unused productive capacity. This is true. But declining purchasing power, this is not right. Declining purchasing power comes with inflation. And this is unlikely in a trough. Which of the following methods may the Federal Reserve use to reduce inflationary pressures? A, decrease reserve requirement. Wrong. If the reserve requirement is lowered, there will be more money supply. It is an indication of expansionary monetary policy and it will cause the price level to rise further. This is totally not recommended. What about B, increase margin requirements? Yes. That's what should be done. Increase of margin requirements will lower the money supply. It's a contractionary monetary policy and this would lower the economy price level. This is the right option. What about C? Increase the money supply. Increasing the money supply is not a method but the effect of a given method used by the Federal Reserve. It will result in a higher price level, not lower it. It will increase inflationary pressure. We want to reduce inflationary pressure. Decrease the target interest rate. If this is done, there will be increase in money supply. This is an expansionary monetary policy and it will result in an increase in the general price level in the economy, hence not recommended. Under monopolistic competition, strategic plans focus. We have done this question many times, and this is it. Maintaining the market share and planning for enhanced product differentiation. That is C. We have done this question 3 times already. Which of the following might be considered the most expansionary set of fiscal policies? Increase government spending, yes, it's expansionary. Increase in taxes, that is contractionary. Increase in government purchases, expansionary. And decrease in taxes, expansionary. That makes sense. B is the correct option. Why not the others? Of course, you have the very obvious reason. Decrease in taxes, expansionary fiscal policy. Increase in money supply, this is expansionary monetary policy, not fiscal. So apparently it's expansionary, but this is monetary. We're talking about the fiscal policy, so this is incorrect. Increase in government purchases, that is expansionary fiscal policy. Increase in the money supply, it's expansionary monetary policy. So this is incorrect as well. Which of the following statement is correct regarding the variety and price of products produced under monopolistic competition as compared to production under the perfect competition? The monopolistically competitive industry produces greater variety of goods or products at a lower cost per unit. This is incorrect. There would be greater variety, but the low per unit cost is not right. The monopolistically competitive industry produces greater variety of products, correct, at a higher cost per unit than the perfectly competitive market. This is true. This statement is correct. What about the other options? The monopolistically competitive industry produces smaller variety. That makes C and D incorrect. When markets are perfectly competitive, consumers have goods and services produced at the lowest cost in the long run. This is absolutely correct statement. What about B? Consumers must choose the brands they buy solely on the basis of informational advertisement. That would be true in monopolistic competition, not in perfectly competitive market. Consumers do not receive any consumer surplus unless producers choose to overproduce. Well, what is consumer surplus? The price the consumer is willing to pay versus what it pays for it. But this has nothing to do with the question we are doing. Consumer must search for the lowest price for the products they buy. Again, wrong. In perfectly competitive market, the consumers are the price takers at the market equilibrium. They do not discover the price. They will have to buy the goods at the currently prevailing price. So that makes A to be the correct option. Any business firm that has the ability to control the price of the product it sells faces a downward sloping demand curve. That is true. Absolutely true. For monopolistic competition and for monopoly, the demand curve is downward sloping, but for the competitive market, the demand curve is a horizontal line. So that means we are not in a competitive market. You are being a monopolist or monopolistic competition or maybe an oligopoly. So it does not have any entry or exit barriers in its industry. That is only true for perfect competition, not for the type of firm you're talking about. Has a supply curve that is horizontal. This is again wrong because a firm controlling the price of its products, it would not cause the horizontal supply curve. The supply is not perfectly inelastic for such a firm. Has a demand curve that is horizontal. That is only true for perfect competition. Only firms in perfectly competitive markets, they face horizontal demand curve. So that makes A to be the correct option. Which of the following is not a feature of a firm operating in a monopolistic competition environment? The firm faces a downward sloping and fairly inelastic demand curve. This part is wrong. It would be fairly elastic demand curve. So that's basically is the wrong statement. The firm faces few barriers to entry. That is true. The firm is able to influence prices. That is true. Other companies producing similar products. That is true also. This is not true. The firm facing downward sloping curve and it is fairly elastic demand curve. Which of the following statement is correct regarding an economy at the peak of business cycle? If the economy is at the peak of its cycle, the economy will be in a static equilibrium? No. This peak is temporary. It will be followed by contractionary phase, and then there will be trough, slump. So it should be B then. The economy will be at the natural rate of unemployment. There are different types of unemployment. Let us briefly discuss. Frictional, structural, seasonal, and what you call the cyclical unemployment. Now, frictional unemployment means a person who is jobless and is looking for a job. The time it takes from switching a job from one job to another, the period for which he was unemployed, and that's called frictional unemployment. Structural unemployment occurs when the economy changes its structure. Like way back when Japan transformed its economy from marine to high-tech electronics manufacturing. Many people involved in fishermen, they were rendered jobless. That is structural unemployment. Seasonal unemployment is caused because of the changing in season. That's especially true for agriculture businesses. And this is important. Cyclical unemployment at the peak would be zero. Cyclical unemployment would be zero, which implies that economy is operating at its highest potential level, and these three might exist, and this is what you call the natural rate of unemployment. Incomes will be stable. This is not true because income are either leveling off or they might decline as the cycle moves into the contractionary phase. Not right. And then the rate of inflation will decrease. No. Price levels are likely to be still high because you are at the peak. Once the peak shifts to contractionary phase, only the price levels will fall. So this is incorrect as well. So this is the correct option. The economy will be at the natural rate of unemployment. Cyclical unemployment would be zero. Only frictional, structural and seasonal unemployment would exist. That's what you call the natural rate of unemployment. Which of the following conditions is most true during recession? Output is increasing. This is ridiculous. Not, it doesn't. The natural rate of unemployment will increase dramatically. Wrong. Because natural rate of unemployment will not be affected by various phases of the business cycle. Only at the peak, your cyclical unemployment is zero. Rest of the sum will give you the natural rate of unemployment. This is not true. What about C? Potential output will exceed the actual output. Yes. When the economy is in recession, potential output will exceed the actual output that is being produced, and this is the right option. What about D? Actual output will exceed potential output. This is totally opposite to option C, hence incorrect. Compared to firms in a perfectly competitive market, a monopolist tends to produce substantially less but charge a higher price, and for that very reason we call it a monopolist. Produces less and charges a high price. I think you no need to look any further. This is the correct option. A natural monopoly exists because the firm owns natural resources, not natural monopolies, not because of natural resources. Natural monopoly occurs when economic and technical conditions permit only one efficient supplier. Like in Pakistan, electricity is distributed by a single firm called WABDA. So WABDA is a natural monopoly, right? Government is the only supplier. This is not necessary. Governmental control may create a monopoly, but not a natural monopoly. This is basically a regulated monopoly. Other firms are unable to enter the industry. Barriers to entry help create a monopoly, but the product must be unique, and that's what gives monopoly its power. So B is the right option. This is an interesting question. Which of the following concepts can best be used to understand oligopoly behavior? First, concentration ratio. What is concentration ratio? Concentration ratio is a tool we use to measure the concentration in a particular industry. It's an indicator of an oligopoly, and it just measures how much power is concentrated amongst how many firms within a particular industry. So basically it's just an indicator, but it's not a concept that we use to understand oligopolistic behavior. Inter-industry competition. Again, inter-industry competition involves firms from different industries competing against one another. Understanding oligopoly behavior, what causes oligopoly, the features of oligopoly, this is not something we can use to understand how oligopolies work. Huffington Index, it's a measure of the size of the firms relative to the industry. Like if this is the industry size, one firm has how much portion of it, of size of the firms, few firms relative to the overall size of the industry. This is what we measure through Huffington Index. So this is a tool to identify oligopoly, but it will not help us understand the oligopoly behavior. Then it has to be C, game theory. That is true. Game theory is a study of mathematical model of conflict and cooperation. This is the tool that we use to understand the oligopolistic behaviors, and this is clearly beyond the scope of your CMA CPA syllabus. An increase in government spending will tend to cause what? If the government spends more, it will cause the GDP to go up, not to fall. Unemployment will fall. GDP to rise, unemployment to fall. Yes, absolutely right. This is the correct combination. And of course, we have the valid reasons to reject C and D. GDP to rise, correct. Unemployment to fall. GDP to fall, no. GDP to rise and unemployment to fall, yes. So there are obvious reasons why you're rejecting C and D. Next. The Federal Reserve wishes to conduct expansionary monetary policy. Which of the following policies approaches will be most successful? Sell government securities? No, that would be a contractionary monetary policy. Raise the required reserve ratio? This again will be a contractionary monetary policy. Look at B. Sell government securities? No. Lower the discount rate? Yeah, that's partly true. That is in fact an expansionary monetary policy. Purchase government securities? That would increase the much needed liquidity. Yes, that makes sense partly. And raise required reserve ratio? No. Then it has to be D. Purchase government securities? Correct. That is an expansionary monetary policy component. And lower the discount rate? Correct. So now we know it's D. If the Federal Reserve raises the discount rate, which of the following effects is likely to occur? Fixed interest rates on mortgages will decrease. No, this is incorrect because mortgages that have fixed interest rates will not be affected by changes in the discount rate because they are fixed. B. Short-term interest rates will likely increase. Again, if the Federal Reserve raises the discount rate, which of the following effects is likely to occur? Remember, discount rates are basically the interest rate charged by the Federal Reserve to its member banks for short-term loans. So when the discount rate increase, that means the cost of borrowing for the banks increase. So that would mean the short-term interest rates will likely to increase. So you should look no further. But let's discuss option C also. Consumer spending will increase. Wrong. Consumer spending will likely fall because when the interest rates go up, the demand for goods and services fall because the borrowing cost goes up. So in fact, consumer spending will decrease. Corporate profits will increase. This is incorrect because when the interest rate go up, the borrowing cost goes up. Borrowing cost goes up means the interest expense goes up. When the interest expense goes up, that means the profit will fall, not increase. Which of the following strategies would the Federal Reserve most likely pursue under an expansionary policy? Purchase federal securities? Yes, that is expansionary policies element. And lower the discount rate. I think you should look no further. That's the right answer. But if you insist, reduce the reserve requirement, that is an expansionary policy element. While raising the discount rate, it is not. Raise the reserve requirement, no, you should reduce. Lower the discount rate, yes. Raise the reserve requirement, no. Raise the discount rate, no. So the only combination that is yes, yes is A. If an economy is currently experiencing both full employment and price stability, a major tax reduction will probably cause an increase in the unemployment rate. No, unemployment rate will fall, not rise. Tax reduction is beneficial for the firms, beneficial for the consumers. They will have more disposable income, they will spend more, they will demand more goods and services, firm will hire more people, and existing employed will ask for more pay. So this is wrong. An acceleration in inflation rate unless government expenditures are also reduced. This is true. A tax reduction means more income for the firms, more disposable income for the consumer, which means higher consumption, higher disposable income, and it will eventually increase the price level. So it must be balanced by a reduction in government spending, otherwise there will be inflation. So this is the right option. No change in GDP or the price level, wrong. The price level would rise, not remain unchanged, because when there is tax cut, more demand for goods and services, so the price level goes up. Decrease in consumption, no. Reduction in tax means consumption would rise, because people will have more money to spend, more disposable income. Incorrect. An increase in the personal income tax will tend to do what? When the personal income tax is increased, people will have less disposable income. GDP will fall, correct, and unemployment will rise. That is true. When personal income tax is raised, that means people will have less money to spend, there will be less economic activity, and hence less demand for goods and services. So the firms will lay off the staff, unemployment will rise. That is the right option. An increase in the discount rate would cause the money supply to increase. No, when the discount rate is increased, the money supply decreases. Money supply decreases, yes, and interest rate rises. Yes, that's true. That's what we just discussed. When the discount rates are increased, money supply decreases and the interest rate rise. Suppose stock market is booming and it causes a large increase in the wealth of individuals and firms. If the Federal Reserve wanted to counteract the effect of the stock market boom on the economy, it could A. Purchase government securities or decrease the discount rate. That will cause the boom to become even more severe. Purchase government securities, it will push the prices up. When the discount rate is decreased, that means the cost of borrowing falls. People will borrow more money from the banking institutions and invest in the stock market. Don't do that. Sell government securities and increase discount rate. This is true. This is true because when the wealth increases, it increases the GDP and it also affects the price level. Inflation creeps in. The Federal Reserve can intervene. What it can do, it can sell government securities and increase the discount rate. It could do both and then it would be able to control inflation. So this is the right option. The US government and the Federal Reserve are working to help the economy rebound from a recent and prolonged economic slump. Which of the following actions is least likely, mind this word, least likely to help them meet their objectives? If the marginal income tax brackets are lowered, people will have more disposable income, more economic activity. So this is good. This would be good for economic growth. Decreasing the required reserve ratio, again this is good for the economic turnaround. Increasing government spending will increase the aggregate demand. This is good. But selling US Treasury bills and notes, this would be a contractionary monetary policy, so this won't help. If the goal is to help the economy rebound from slump, an appropriate action is to buy government securities, not sell. So this is least likely. Greenwood Corporation has been in business for 20 years. This year its profits have hit a record low and 3 of its factories are working a 3-day week as a result of low product demand. So it means Greenwood appears to be in trouble. Redwood Corporation, however, has shown steadily rising profits over the last 3 years and is actively recruiting the staff being laid off by Greenwood. Select the answer that most appropriately describes the phase of business experienced by these two businesses. So this is fairly straightforward. Greenwood is in trouble. It's in the woods. So basically, Greenwood is experiencing a trough. And at the same time, Redwood is in expansionary phase. Redwood is showing rising profits, but there is no indication of its having reached a peak. Right? It is recruiting staff and it's clear indication of an expansionary phase. Whereas Greenwood has clearly hit the record low as stated in the question and now it's reducing its staff, a clear indication of trough. Which of the following is the most likely result of imposing tariffs on imported goods to increase domestic employment? Let us do B first. A short-run increase in domestic employment in import industries from export industries. This is incorrect. Tariffs are taxes on imported goods. So it will likely result in a short-run decrease in domestic employment in import industries because imported goods will become very expensive. So this is not right. A decrease in the tariff rates of foreign nations, wrong. An increase in tariff implemented domestically will likely lead to an increase in tariff rates of foreign nations. They will retaliate. A decrease in consumer prices in the domestic market. This is incorrect as well. If anything, higher tariffs and increases in domestic employment will lead to higher consumer prices as cost increases and sales must increase in order to maintain profit. So this is again incorrect. Then it has to be A, long run reallocation of workers from export industries to protected domestic industries. We know tariff are the taxes imposed on imported goods. One of the desired effects of implementing a tariff is that if imported goods and services become more expensive, companies and individuals will be more likely to produce domestically, thereby increasing domestic employment. Right? So workers will be needed to meet the demand domestically, so your local industry will progress. A is the right option. Information regarding 4 aluminum manufacturers is given below. Alpha, Brighton, Cobalt, Driftwood Company. According to international law, which of the following aluminum producer is dumping? Dumping occurs when the price charged to foreign customers on the export goods is less than either the price charged in the domestic market or less than the production cost. Let us see in the reverse order. For Driftwood, the price charged to foreign customer is more than the cost and is more than the market price, so he is not dumping. Cobalt is selling at a higher price both domestically as well as to the foreign buyers. He is not dumping. Brighton is also selling at a higher domestic price, low domestic price but higher international price, so it's again not dumping. But Alpha, look at this. Alpha's cost of production is 60. It is selling at a low cost domestically as well as internationally, which means it's dumping. This is dumping. Dumping occurs when the price charged to foreign customers, this one, on exported goods is less than either the price charged by domestic market or the cost of production. So you are selling at lower the cost, so that means Alpha is dumping, so that would make A to be the correct option.